everyone. Welcome to another KE Report webinar produced in conjunction with Focus Communications. My name is Corey Fleck. I'm your host for this webinar, also your host over at my website, kereport.com, and podcast The KE Report, where we cover market moves on a daily basis, as well as spend a lot of time with resource companies, much like the company I am featuring today in today's webinar, Eloro Resources, traded on the TSX Venture Exchange under the symbol ELO. Sorry, that is on the TSX under the symbol ELO, on the OTCQX under the symbol ELRRF, and on the Frankfurt Exchange under the symbol P2Q. I am joined by the president and CEO of Eloro Resources, Tom Larson, as well as the executive vice president of exploration, Bill Pearson. Now, for all of you that have been staying up to date with Eloro Resources, company is focused at the Iska Iska Silver Tin Project in Bolivia. The company just released an initial resource. We're going to be covering a lot of that resource and also talking about what work comes next. I think we all know that resource estimates are really just a time or a snapshot in time of the resource, and undoubtedly there's always work to be done on the back end of that. So the team at Eloro Resources has put together a presentation. I will let Tom and Bill run through that presentation and also interject in some questions. I've already received a number of questions from all of you, and you are able to ask more questions throughout this webinar. Please use either the chat function or the Q&A function within the software, and I will be sure to note those questions and save them for either the tail end of this webinar or interject it as the guys are presenting. So Tom, Bill, thank you very much for taking time to join us. Everybody, thank you for tuning into this webinar. Tom, take us away, please.
First of all, thank you, Corey, for setting this up. Before I get into why I'm on this webcast, I mean, this is primarily an MRE, and Bill will certainly describe, just the geology side of things and how truly impressed I am. But I also wanted to get, just bring a few things into context, because there has been a tremendous amount of noise that's come our way over the last 6 months. And I'll certainly take, being the CEO of the company, I'll certainly take the criticism on the delayed MRE. And I apologize for that. I think in hindsight, we probably should not have come up with a timeline, especially when you're dealing with such a sizable type of deposit potential with the multi-metal facet that obviously needs a lot of metallurgical work, and through that optimization in what we now have come up with, which is, I think, huge, is the ore sorting XRT through Mike Hollywell, who's now our senior metallurgical advisor, working very closely with Bill. Apologies for that. But when I look at what they've come out with as a first pass, conservative resource, no fluff here, of over 670 million tons, with a potential starter pit in that of close to 130 million tons of NSR cutoff, gross profit, 25 bucks a ton. I'm pretty impressed. And for those that are out there saying, we've done a lousy job, okay, everyone has their opinion. But I'll tell you this, when you're showing $28 billion worth of in-situ value, when you make up the different metals that we're slowly coming up with, I mean, please give a little bit of credence, a little bit of pat on the back to Dr. Bill Pearson and Dr. Osvaldo Arce. They've done a great job. This is a never before explored deposit. We came out 3 years ago, nothing had ever been drilled on this. It was a big volcanic looking edifice, nothing on surface. And since 2020, we've taken underexplored, never been drilled property and created one of the most significant greenfield discoveries over the past 25 years. Over this time period, the geologic team has expanded from 3 to just over 100, incorporated leading edge AL technology, scanning, exploration progress, engaged in multiple environmental and social programs, and put into place the processes to move this discovery now towards a PEA. It is important to note that most other significant deposits that have been developed over the past 2 decades have started with extensive historical drilling and a resource already in place, though it may not be 43-101 compliant. We started from scratch and continue to see exceptional exploration upside. So I just want to bring that out in our sort of defense, not trying to, overly protective here, but I just feel that I'm so pleased and more encouraged than ever as to the next steps of this incredible deposit. That's sort of my 2 cents worth from the standpoint of how I feel. But now let's get into the more important stuff. Basically, our recent press release, August 30th, the MRE release, authored by Micon International. It was an interesting period. I looked at it, and we were looking at it a week before we brought this out, and I thought it was quite robust. I think from the very point that you see a 1-to-1 strip, you see close to a $6 billion NAV, and $3 billion of that NAV is in a starter pit potential. Again, with a $25 NSR cutoff. I think that's a really, really good start. It's sort of like the cherry on top. And the next job, with that, it really helps us in deciding, okay, now where do we go? This is such a big, big system. This gives us guidance, finally, to go forward on the important things short term, enhancing this starter pit area, enhancing it for a PEA, and maybe bringing more tonnage into that first pass pit with potentially higher grade with the infill that Bill can discuss. He's qualified, not me, to do that. But bottom line is, if we can improve the overall grades, because of all the historical drilling, up in those areas of 100, 200 meter spacings, we were seeing average of well over, 2-3 ounces silver equivalent. So I think there's lots of room for grade, revaluation in that area. But importantly, if we can show a 25 NSR net and get that up to 35, 45, and improve the tonnage in that starter pit to 200, 250, and that's what we're hoping to do with the 2 drills for definition drilling, 50 meter spacings. Then I think you're going to see a very strong NAV on something that's absolutely accessible and could be mine ready in a jurisdiction like Bolivia, which might only take 2 or 3 years rather than 8 or 9 in most other jurisdictions in North America, for instance. So, guidelines such as the San Cristobal model, we're very fortunate that Dr. Quinton Hennig, his group and financiers have come in and taken a good position in the operation of San Cristobal. That's invaluable information that we want to see, and hopefully we can sort of optimize some of the costs from what a great job the San Cristobal operation has proven in the past, and with the same engineering team are proving going forward. So that's going to be a lot of good information for our PEA. So that's sort of where I am. I'm really looking forward to the next phase of drilling, which will focus in initially on upgrading grade and tonnage in the starter pit from the current 120 million ton to potentially 200 million ton, 1-to-1 strip, which is all important. Look around most other mines, you don't see 1-to-1 starting off like this. So if you can get the grades up even more, which I believe we will, it's going to be a very robust. And the bottom line is, I'm here to see a 50-year mine life. We're not going to just build this ourselves. Obviously, the street knows that's not what we do. We certainly have very strong technical advisors, mining engineering advisors, corporate advisors, and we'll do what we can to optimize shareholder value. But I am very, very intrigued, and I'm thankful for Bill's efforts and Dr. Osvaldo Arce's efforts. I'll answer some questions later, but Bill, why don't you go from here?
Yeah, Bill, take us away, because there are a lot of questions about how you're going to upgrade this, what the strategy will be. So take us through some of the slides that you have prepared for us, please.
Yeah, absolutely. Thanks, Tom. Let me just flip ahead here a little bit. Here's a map you've seen before. This is shows the remarkable mineral endowment in Bolivia, and particularly in this famous Bolivian tin belt, which is in the gray. And, you know, as Iska Iska developed, and obviously with the first resource out, Osvaldo, who's an expert on Bolivian deposits, said, look, Bill, Iska Iska is joining the ranks of the giant deposits in the Bolivian tin belt. Cerro Rico de Potosi, obviously the largest silver producer in the world, is one of them. And the other one just up in the north, Yayaga, which is a tin deposit. Those are the two that Osvaldo considered true giants. Well, Iska Iska is now the third giant in this belt. And as Tom mentioned, we've taken this from a grassroots discovery stage through to an MRE. This is not one of the typical old properties that was found in the 60s and 70s and rehabilitated because of higher prices. This is a true grassroots discovery. So to go from 0 to 670 million tons is really quite remarkable. But let's look at it in a little more detail. Many of you have seen this picture before, this tremendous caldera, this volcanic edifice. And this is a simplified geology map here. You can see the Iska Iska porphyry in the middle, the Santa Barbara breccia pipe. It's a classic collapsed caldera complex. And you see the red outline there. That is the potential pit defining the mineral resource. This pit is 1.4 kilometers in diameter. It's huge. And it goes about 750 meters below the Santa Barbara Hill. And as Tom mentioned, everything here is mineralized to a certain degree. We've done 139 holes, just under 100,000 meters of drilling. We haven't missed in one hole, which is extraordinary. And there's a mineralized envelope here that has about 30 grams silver equivalent that Micon actually used to define the limits of the system. And basically this whole thing is the system. And if you look at this next map, in the middle of this map in that magnetic low area, that's where that potential pit is. But the actual size of the overall Iska Iska system, as shown by this magnetic map, is probably about 5 by 3 kilometers. This thing is huge. And of course, we announced fairly recently that we have an interesting tin hole down here in Casitarita, which is 2 kilometers away from where our resource is, which had 0.1% tin over 53 meters. This system is absolutely the biggest and most intense I've ever had the pleasure of working on. And we've still really only scratched the surface. And one of the key points here is, here's our drilling map here. There's the outline of the potential pit. You can see, especially down in about 2/3 of the southernmost drilling here, it's 100 meter spaced holes. Very, very wide spaced holes. And the fact that we're hitting very good intersections in all these holes is telling you, hey, this system is really extensive, but, and there's a big but, you are not going to get an accurate representation of grade. You will never miss the system here, but you need more infill drilling to up the grade, as Tom was referring to. The other thing that's really important, and we put this out with our metallurgical update, we have two big domains here. And the reason we have them is there's two major stages of mineralization. There's the early tin porphyry stage. This is a deeper, higher temperature event, which was first. That's the red here. And there's a second superimposed epithermal event, which is higher level, lower temperature, which is superimposed. That's why you see a split in our resource. These are two different domains. They also behave quite differently in the ore sort. Now, going to the resource statement, here's a 3D view of the block model here. And you can see we split it into the polymetallic and into the tin domain. The bulk of the tons right now are in the polymetallic. That's really an artifact of the amount of drilling. We drilled all the way down the valley, which happened to be all polymetallic. The tin side, even though it has a significant tonnage, is really very, very under-drilled. And you can see the numbers here. And these NSR calculations, people have commented, well, that's kind of confusing or whatever. The reality is that the reason Micon used that is because you have four major components here, and each contribute value. And it's not like you can outline a silver area or a lead area or a zinc area. You have to consider all those factors. And as Tom mentioned, when you look at the, for instance, in the open pit, you've got quite a nice margin, operating margin here. And it's also important to point out that these aren't back of the envelope numbers that somebody came up with. These numbers are all based on very rigorous metallurgical testing, which Mike Hollywell supervised, Richard Gowns at Micon. And these numbers include all operating costs. They include metallurgical recovery and smelter recovery. So these are very, very solid numbers. And
Bill,
you can see the overall...
Bill, there's one question that has come into that I would like you to address here is why the cutoff for the high-grade zone is so much higher than compared to the whole open pit scenario. Address that when you can, please.
Well, let me get to that.
Sure.
So anyway, so you see this overall total, which is tremendous, 670 million tons. Now, just to put this into context, I was looking at the information from the Tin Association, and our 110 million tons here at 0.12 tin, that's actually is the 10th largest undeveloped tin deposit in the world. Our zinc sits up about 10th undeveloped zinc deposit. Silver is even higher, about 3. These are enormous numbers on a worldwide scale. This is a true giant. So let me get into your question. Well, one of the key things is that, well, Tom mentioned the overall stripping ratio is 1-to-1, but clearly what you want to do in a PEA is to start mining in a higher grade area so you can generate earlier payback. And of course, that was why we pointed out in the press release, there's a very, very nice high grade area here, which has 132 million tons at 1.1% zinc, 0.5 lead, and 24.3 silver, which has an NSR value of 3450, and that's at a cutoff of 25. So you can see this reddish area right in the middle. That's where the PEA will start looking at it. But you ask me, well, how well defined is that? Well, some of it is pretty good, but we can certainly do more fill-in drilling. A lot of this low area is just an artifact of the most drilling. We know the system's there, but in order to get an accurate representation of what the true grade is, you need more detailed fill-in drilling. And I certainly feel very strongly, and this will be a focus of our next program, I think we can increase this to 200, 250 million tons, which would give enormously nice start to your PEA, give you your 10 years production, say 50,000 tons a day. And of course, as everyone knows who's familiar with financial modeling, after 10 years, you don't get any added benefit to your net asset value. Although obviously, if you're a large company, having a long life asset is really, really important. And one of the big advantages of us drilling across the valley and showing that the system goes is, of course, just about everything ends up in the pit. We only have a little bit of underground down here. So that's also a big advantage, because absolutely, if you can mine it by an open pit, obviously financially, that's going to be a lot cheaper. And this is just a little bit of a view here, just showing you what the high-grade zone looks like. You can see it very nicely here, and in the long section and cross section, it's a very nice cohesive zone. But the green outside is obviously below in our present model, but there's no question in my mind, as we drill this out, this will definitely upgrade. We know the system is there, but we can expand it. The overall stripping ratio in this entire pit is 1-to-1, which is phenomenal. Ask yourself, how many open pit mines do you look at that have that kind of life of mine strip ratio? And of course here, as you can see, we have stuff right up to the surface here. So you're going to have early production with relatively little strip, which is a big advantage. And then the other bigger, longer side upside, here's our magnetic inversion model, which we've shown quite a lot. We certainly believe that is likely reflecting our potential tin porphyry. We see parts of that up on the west side of Santa Barbara. And we've superimposed the block model here. Again, this tells you the scale of this overall system. It's really, really massive. So here we are, and Dr. Osvaldo Arce is the expert on Bolivia, and he's very, very passionate. This is a giant deposit in the Bolivian tin belt, and it's not very often that you have the privilege of starting out a grassroots project, ending up with a giant. It's really phenomenal. I pinch myself all the time. I've been doing this for almost 50 years, and I've had some good successes, but my goodness, nothing on this scale. But as we sit here today, we haven't defined the full limits of the system. We don't know really what the true grade is. The mineralized envelope is unbelievably extensive. And here we are, and we've done all this with just under 100,000 meters of drilling. And it's not necessarily that we're geniuses, it's the fact this system is so big, so intense. That is why this is such a fantastic deposit. Now, you asked about next steps here. Well, we put out, as Tom said, a very robust resource, no question about it. Go and look around the world and ask yourself, what other projects have put out this scale of resource, and also what other projects at this stage of development have done the extensive metallurgical work we have. But we needed to do that in order to show what a great deposit was this. And this, of course, provides us with a tremendous stepping stone to the PEA. We're going to start, as we've announced, definition drilling pretty soon. We're working with our mining engineers and metallurgists to figure out the most optimum areas to drill. And we'll be all going down there in a couple of weeks to have a kickoff meeting and plan this all out. The in-situ net NSR value is really extraordinary. 3.3 billion in that shallow high grade zone, and 6.8 billion overall, and that's net NSR. That's not gross. That's net. Can this be improved? Absolutely, absolutely. And as I mentioned, we still haven't defined the limits of the system. So we think this is one of the most remarkable, attractive projects on the planet. We're going to continue to work hard for our shareholders, and you're going to see many more, I think, positive developments. And the future for Eloro is very, very exciting.
All right. Thank you, Bill. Do you have any more slides, or are we getting into the questions here? Because there are a lot of them.
Yeah, I think we should just get into the questions.
Questions? Let's do it. Okay, so a lot of questions are asking a number of different avenues when it comes to this definition drilling. Can we start off with, do you have any idea of how many drill holes are going to be required to bring those spacings down from 100 meters to, let's say, 50 meters?
Yeah, I think in general, the obvious thing is, to fill in at 50-meter levels. We're also looking at the orientation of the higher grade zones, particularly the high silver zones. We've had previous drill holes, for example, K27 had 60 grams silver over a long intersection. And these are controlled by structures. So we're going to check and make sure that we have the optimum orientation. And we're also going to look at what is the most optimum area to drill off from a metallurgical point of view. You clearly have two major flow sheets here. You have a lead zinc concentrate being produced by flotation. Most of the silver is going with the lead concentrate, some with the zinc. And then the tin is basically a different aspect in total, because what you have to do is you float off the sulfides from the tin, and then you process the tin through much more of a gravity, it'll be a flotation and then gravity circuit. So one of the things that the engineers and my colleague will be looking at is, do we start off with basically a polymetallic plant and we do the tin later? Do we do them both together, or how does that all work? But it's very clear that you have two major types of processes there. So the fill-in drilling, which we're busily designing, will be on roughly 50-meter fill-in, but we will very likely do some holes at different orientations to make sure we're catching the higher grade structures that we know. I mean, for example, in the Santa Barbara adit, we have a section that's over 1,000 grams silver. So obviously we want to make sure we catch those sort of structures. And with the fill-in drilling, you'll never miss the system, but because of the statistics of whether you hit the high grade or not, you're going to get more definition of the high grade values just with the fill-in. So it'll be a very, very good program, but we're planning it out in detail. We want to optimize it as much as possible, and with the goal of getting to about 250 million tons, which is perfect for a 10-year mine life.
Okay, so I guess that brings up another question then. With this definition drilling, is it about growing overall mineralization, growing the total size of this, or is it more about upgrading the actual grade?
Oh, it's all about upgrading. I mean,
okay.
We've proved that the size is there. We know the system is huge. And you're looking at a mine life that's going to be, many, many years. So the focus for us now is, and for me, running the exploration is, I want to be able to deliver the best resource at the best grade I can reasonably do to our engineers doing the PEA. And I know technically that our wide space drilling, while it tells you the system is there, it doesn't reflect the true grade of the system because it's too wide spaced. And that's a fairly typical situation you run into. So as I increase the drill spacing, I'm not going to miss the system. We know it's there, but I'll get much better representativity and sampling of the highs. And one of the other exercises we will do when I'm down there is we do have some areas that are much better drilled around the Santa Barbara Hill. And that really isn't a geological reason. It's more a function of we have more drill holes. So we'll do an exercise called clustering where we selectively remove data and see when the block model starts to fall apart. And when we get to that point, we know that's probably getting around the optimum spacing. And the other thing, of course, is to have a hard look at the structure. We actually are supporting a research project in Western by one of our Bolivian geologists who's doing her MSc, looking at these different breccias because they're where a lot of the high-grade material is, and figuring out which generation is what. And once we understand them better, we can predict better where they go. So we have all these facets going. The other thing that we're taking full advantage of, Tom mentioned, we have a geologic AI scanner. It's a marvelous piece of technology. I'm working with them to develop geomet zones that will help not only the metallurgy, but I think also help us to better predict where the higher grade zones are likely to be. So all of that work is going on and obviously continues to expand our understanding of the deposit and improves our ability to efficiently target those drilling.
Corey, if I could interject here, you mentioned your point about our definition drilling, just upgrading, the values. Well, yes, but you take a look at that starter pit on both east and west on the strike. There's lots of room with this first pass drilling to also bring in more tons at a higher grade. So it's not just upgrading the values within that more concentrated area of the starter pit. It's added to get that point across. So just that area alone could be well over, $3, $4, $5 billion of NAV. I mean, that we're trying to attract a much bigger audience on this, and there are things I'm going to try and do to help that out. We're doing our best. Like people say, there's no communication. There hasn't been a lot of communication the last 2-3 months. The drilling had stopped, but we were really waiting for all of this ore sorting, metallurgical work to be concluded before moving forward on the MRE. We have all that information now, so we are going to start drilling. I think Bill's talking 4,000 or 5,000 meters starting off, infilling. The laboratories are a lot. There's turnarounds are going to be a lot smoother than they have been in the past. They told us that. So in other words, news flow, and we won't wait around 3-4 months for news. You will see drilling results coming out 1 or 2 at a time. That's if it warrants something that's going to really improve the first pass in pit of the MRE.
Okay. What people are really wondering here, what investors are asking too, is how many holes approximately, because I have people here estimating it could be hundreds of holes that you need. How much is it going to cost to upgrade this mineralization, bring in this higher grade? I know it might be a little too early to tell that, but there are some wild estimates that I'm getting here. So can you give us any clarity on approximate number of holes, even time frame to drill these holes, and how much it could cost?
Well, sure, I can answer that. I mean, we were pretty clear in our prospectus that we put out recently with that small financing, and one of the reasons for that was to cover off what we felt would be required in definition drilling. So we're looking at about an amount of 10,000 meters. I don't know where these crazy figures come from. They certainly don't come from me. It'll be that order of magnitude. I mean, what you have to recognize is that we're not guessing where to drill these holes. We know exactly where to drill them. We'll optimize them, obviously. But, you know, we're going to be bringing several drills in there very shortly. Initially, we're doing, as we've said, we're doing some large diameter PQ met holes. We're going to do two in the polymetallic, one in the high grade part, one in the lower grade part, and one in the tin zone. That'll be about 1,200 meters of drilling. That will be shipped over to initially to Wardle Armstrong for some light crushing, and then we'll go to Tomra for a much more definitive ore sorting test called the Cascade test. And then we'll continue on and do the definition drilling, which will be about 10,000 meters. That should be sufficient to meet our goal to fill out that tonnage. Remember, for a PEA too, we only need an inferred. We have a lot of inferred, but the reality is, once we do the additional metallurgical testing and confirm it, in my opinion, a lot of the drilling around the Santa Barbara Hill area, for example, is more than sufficient to classify that as indicated. So we're not looking at 100,000 meters or whatever. We know where the system is. We're going to look at it in detail and optimize the drilling, but that's the current plan. So we're not talking about 12 months to get this program done. I want to get the drilling done and out of the way. That, obviously by the end of the year, one rig can do roughly 1,000 meters a month. So a couple of rigs can do 10,000 in 5 months, and we may in fact just bring in a third rig just to speed the whole thing up. So we're not looking at a huge long frame here.
Okay, that answers a lot of questions. So
other than the cost, let's get the cost in there.
Yeah.
That's what everyone's also
wondering. Well, our overall all-up cost for absolutely everything is just over $300 US a meter. It's very, very competitive cost-wise. It's gone a little bit from when we started, mainly because of some inflation. But that's a very solid cost. We don't get crazy overruns in these programs. We're extremely well set up logistically. Our drill contractor, Leduc, who's been there from the start, has been doing a tremendous job. So, you're looking, you multiply 300 US by 10,000 meters, you're looking at about a 3 million US program, which is well within the current treasury of Eloro. So we're not going to run out of money using this. We've budgeted in the cost of the PEA, which will be probably around 1,200, or sorry, 1.2 million US, but that includes all the various metallurgical work and so forth. So, you know, and the one thing Tom has done a tremendous job, and that's the key job of a CEO, is making sure we have enough money in the treasury to do the work we need to do. And so we're in good situation in that regard.
Okay, that does answer a lot, and that you at least say that you have the cash right now to do this drilling that needs to be done to upgrade, to move through this PEA and more, I guess, solidly define that high grade area. There is another question regarding that NSR cutoff. I'm just going to read it here because this investor walks us through it. He says that you use the NSR cutoff interchangeably. Once as a cost, i.e. $9.20 to $6, and another as $25 blocks. So could someone please explain what the true costs are in simple terms per zone, the high grade versus the open pit versus underground? Can you simplify this at all for us then?
Yeah, absolutely. So if you're in the open pit, and remember, we have two different discrete domains here. We have the polymetallic domain, which is the silver, zinc, and lead. And we have the tin domain, which is tin, lead, and silver. So when you're in the open pit, there's two different costs for that. And the reason is that the ore sorting will get rid of about 40% or so of the waste in the polymetallic zone. But in the tin zone, because it's a little different geologically how the mineralization occurs, it actually gets rid of up to 80%. And there's a little bit of metal loss, but that's the reason why in the polymetallic open pit, you have an NSR cutoff of 920, but in the tin domain, it's a little lower at 6. So whenever you're talking about being in the open pit, those are the costs. Now, the $25 cutoff, that isn't a mining, if you're mining high grade or low grade, the costs are basically the same. The difference obviously is revenue. So when we refer to the higher grade area, we just use a higher cutoff to show the distribution of the high grade. But when you're mining in that high grade, your cost is not 25. The cost is 920 per ton. So all that does is it just shows, it's a convenient way of showing the distribution of the high grade blocks. And you can see how nice and cohesive that high grade area is.
Bill, if I could just mention, just on that high grade, just on the NSR itself, it was quoted $40 US, but just so that everyone knows, I mean, then you take out costs like mining, $341, G&A, 55 cents a ton, processing, $862, transport and contingency, another $242. That's where we get our sort of, I call it, a pre-tax profit margin or an NSR cutoff of $25. That's how it works from my thinking.
Okay. I think that does clear it up a little bit more. It just, there are a lot of numbers there that people are trying to work through. Let's also talk about the tin porphyry potential. We've talked a lot about this definition drilling, focusing on this high grade area to bring up that grade. Are you also going to be drilling into the potential tin porphyry that you have discovered?
Yeah, well, that's certainly, the tin porphyry is an incredible target. There's no question about it. Certainly, Osvaldo and I are absolutely convinced it's there. I mean, we see likely dikes that are coming from the mothership down there, which are very tin rich. However, we have to put that target in context. The priority of the company right at the moment is to expand that higher grade zone, get a PEA done. And what I see is that this is going to move into two projects. You're going to have the PEA going on with mining the high-grade zone. And if we can expand it out to 250 million tons, which I certainly believe we can, there's your 10 years of production. And as you know, after 10 years, there is no advantage in terms of your net asset value in your cash flows. Then the second big project here is to continue the exploration on the tin porphyry. We're already doing some thinking and planning on that. And it's just a matter of timing. But our priority right now is to better define the high-grade zone, extend it, get this PEA done, and then move forward from there. And hopefully we'll have, obviously, a much better market, but also a much better recognition in the market. What a phenomenal project it is.
Now, would that be recognition from majors, potential acquirers that would want to build this mine? Any feedback you guys have gotten on that front after this resource?
Well, it's happened. You know, we brought this resource out last Wednesday. We have one NDA signed. There's another group that are looking at us. And when I say these two groups, these are the types that could really take this. You know, they have the balance sheet to spend at 1.5 billion or whatever it might be down the road. So obviously there's a few other groups, smaller, that are very interested, but no, there's two in particular. But it's still, you know, it's early days, and but now we have something to really discuss. And so that's what I'm Chris Holden, who works with me, and Bill, Chris and I will be doing a lot of work in that front. From the corporate strategy standpoint, trying to bring in a strategic that makes sense for us, the shareholders.
Now, are these strategics also guiding some of this definition drilling by saying we do want a little bit more clarity on this high-grade area?
Again, this just came out last Tuesday, Wednesday, so give us a bit of time.
Okay.
I would just comment, the higher grade drilling is driven by us. I mean, I've been around the block a number of times. I've worked on PEAs, pre-fees, feasibilities. I've worked on putting mines back into production. So I'm pretty good on the mining side. And when I first looked at the drawing that Micon sent me, it was pretty obvious. Wow, that's a nice zone. And we really need to have 10 years of production for our PEA, and that's where we're going to get it. So, no, we've recognized that ourselves, and that's obviously driving the process. But remember, fundamentally, I'm an explorationist, so doing this definition drilling and everything else, that's pretty straightforward stuff. I'm really keen to nail the tin because I think there's a giant tin deposit down there. Osvaldo certainly thinks the same. And if I go back to one of his early comments in the early days of Iska Iska, he said to me, you know, Bill, in southern Bolivia, every high peak is a major tin mine, except for Iska Iska. So the immediate question is, what's going on with Iska Iska? Well, we know it's a little different geologically. Things were intensely leached at surface, so you couldn't find anything. But I'm quite sure, and Osvaldo's quite sure, that tin porphyry is there. We see all the indications. So we certainly are not forgetting about that. It's just a question of lining up our corporate priorities and doing what we need first, which is to nail down that high-grade zone. And once we get that done in a nice PEA, I'm looking forward to having a good budget to really, really go after that tin porphyry, which I'm sure is there.
If I could also add, Corey, I know there's been comments about Peter Maroney, and you know, what is his role? What is he doing? Let me tell you this: Bill and I we talk to Peter a lot, and you know, I certainly listen to him intently as to how we want to strategize the best way to go, and he's brought in some very solid advice because he's been through this many times with the sale of even when he was running Humana projects that he sold to, for instance, his project in Brazil that was sold to Lundin for, close to $1 billion US, where it was really low grade, but big thing was the 1-to-1 strip. He brought that up, that the big thing here, and I'm not going to speak out of school. I mean, I've got things from him, but I'll just say this, just out of respect for him, let him bring it out into the public on his time. But the 1-for-1 is very, very important. The 1-to-1 strip, from his opinion, and the NAV that's derived is another very, very serious point that can help, like even 0.3, 0.4 NAV, if it's in an economic model mode, can be most helpful in moving the thing along to a bigger player. So I just leave it at that, but he is very much involved with our thinking, and we'll see where it goes.
Yeah, it looks like some people want Peter to get on here and start talking up the company too. But hey, maybe one time, right?
I would love it. I'm a big shareholder of Eloro. Bring Peter on.
A couple people asking about permitting through the Bolivian government. When do you need to start that? What steps? When can we even start to expect to hear you talking about permitting or needing to go through something?
Well, Bill, I don't know. I mean, just on the same.
I guess. I mean, the current work, which has been a real advantage, is Edwin Villegas, who we optioned the property from. He had a producing mine there, and so we're permitted to do all the various exploration work that we're doing. So we're in a very good situation there. But we're already looking down the road. We have the top legal group in Santa Cruz, PPO, who work with a number of major companies in Bolivia in terms of the permitting process. So we're already looking at starting. We've already done some environmental work. We're going to start a more detailed hydrology study, and we do an enormous amount of community work, our ESG program, all of which is very, very critical in Bolivia, because without local support, you aren't going anywhere. So we've laid the building blocks for all that. And that's certainly something that we'll be really moving forward towards initiating the more downstream permitting process. But for the work that we need to carry out right now, we're fully permitted and we don't have any issues. We have great community cooperation, which we're very pleased with, but we never take it for granted. I think we have about 7 or 8 communities that are signed up in our program. We started with a couple, and we keep having more communities showing up that want to get involved. We do all sorts of stuff like building sanitation stations. More recently, we've been bringing computers into the schools and arranging for instruction. We do all sorts of culinary things. We've done training for basic electrical work and this sort of thing. So we continue to grow and expand those things, and that will all be important part of the downstream permitting process.
Okay. Well, guys, we are coming up to the end of this webinar. We also have a couple people tuning in that want to see you guys buying more stock too. They're asking, are you going to be in the market buying? I know you can just follow along with insider trading reports on that. But before we get out of here, I'll throw it back over to you. Look, we've summarized. You guys have really driven home the steps that you are undertaking here with this definition drilling, PEA, then going after the tin porphyry aspect. Just leave us with an overall, I guess, investment thesis here. Look, the market sold off the stock on the back of this resource. Break down why you think now is a good time to either be in Eloro and what people need to be watching out for.
Well, I'd like to answer that initially. Bill can conclude if he wishes. One of the interesting points, though, just forgetting about the MRE for a second, the stock had consolidated for a couple of years, and talking about, I mean, I bought 100,000 shares of Eloro at $4. I mean, it's down here at $2.30, $2.35, because I know I'm going to get a lot more for it down the road. So I'm not too concerned. And yeah, I'll be in the market again. but that'll be my choice when I do it. I saw a lot of peculiar, like the trading patterns, especially in the last 2 or 3 weeks, has almost been comical, predictable, from the standpoint of $3 breach and suddenly margin call month end. I mean, let's face facts. Look at the volume that happened, precipitated after the infringement through 3 and the cascading effect. And then everyone's assuming, oh, it's got to be the MRE. It's got to be low grade, or is there arsenic, or what's going on here? I can assure you there was a lot of margin selling, and also a lot of people were expecting a liquidity event based on the MRE, that it's going to re-rate things, which I had commented on, which I think it still should because of what we presented, and I think it will. So there's been a bit of a sort of, I would call it almost artificial sell-off as well. Some legitimate for sure. We had to explain the low grade sort of initial scenario. I think that's been explained. But, I'd love to see this thing sit for the next couple of weeks between, this range and $3 to make sure the margin is out of this thing. And then we can slowly start accumulating. So I think that's where I'm coming from on that. As to where we're going, it's all about the drill. It's all about the team, and they're doing a great job. And I know this is going to be a mine. When people like Peter Maroney are reinforcing that fact with what we've got to date, I'm more bullish than I've ever been. That's all I can say.
All right, thank you, Tom. Bill, do you want to add anything
well,
here, or should we just wrap it up?
I was just going to comment, and I know Peter very well. I worked for him for a year after Yamana took over Desert Sun and Jacobina. And 21 years ago, I went down to start Jacobina with my 2 Brazilian colleagues. At the time, we had a lot of the big guys come by, and they all said the same thing: it's too low grade, there's no potential, everything's been found, yada, 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 yada. Well, we worked away, we reinterpreted the geology, we staked the entire Bahia gold belt that was 155 kilometers. We found a huge new extension of Canaveras because we realized when we compiled the data that it had been drilled wrong. And fast forward, I was there last summer for our 20th anniversary of opening this up. That mine next year will be the 2nd largest gold mine in Brazil. So I sit here with Iska Iska and I feel a sense of deja vu. I've been here before. I've been through all this nonsense. In this business, you got to go with the people who know what they're doing, have the experience. We've got a phenomenal team down in Bolivia. We have excellent people working with us like Mike Hollywell. We have been doing our technical homework, and I think that will really, really come forward in the PEA. And this MRE is not a back of the envelope thing. The metallurgy in it is outstanding. It's by far the most metallurgy I've ever seen at this stage, but we did it because we needed to do it. We needed to prove the viability of the ore sorting. We needed to improve recovery, so we did that. And you're going to see a very high level PEA, I certainly believe, and a pretty rapid path to a PFS, because certainly upgrading the resource to indicated is pretty straightforward, but we will have done an awful lot of the required engineering work. So I get a sense of deja vu here. This is a phenomenal project. It's a true giant. Look around the world, how many grassroots discoveries of this scale have been made, as Tom mentioned, the last 25 years. It's in a great country. We like Bolivia, and I'm convinced we'll be a great winner, but like everything, it just doesn't happen overnight.
Yeah.
But you have to do your homework, and that's what we're doing, and the investors will win at the end of the day.
Corey, I just want to say one thing, or finish off on our behalf. I first of all appreciate the work that Haywood, especially Haywood and Cantor Fitzgerald, they are 2 of the firms that are following us and writing reports on us. We're really appreciative of that. As for a PEA time duration, I'm not going to say anything because I don't want to be wrong again. However, I'm hoping it's sooner rather than later. And just also really to those shareholders that have been so supportive. I really appreciate it.
Hey, well, thank you guys. Thank you very much for taking us through this strategy now moving forward. Get drilling, keep me up to date. And I know we have a lot of people following along with this story. So I'll follow up as we get some more news when drills hit the market or hit the ground. If anybody has any follow-up questions, you can always email me directly, fleck@kereport.com. And like I said, I'll follow up with the team as we get some more news, especially on that exploration front, moving to that PEA. So Tom, Bill, thank you very much for your time, everybody. Thank you for tuning into this webinar.
Thanks, Corey.
Thanks a lot, Corey.